Hello and welcome to another Major Market Movements into the Week market review for July 3rd, 2015. I'm Quad G, and in this video we're covering the peripheral markets, the FX markets, some energy markets, and the Dow as well, some of the equities markets as well. U.S. dollar. So we starting off here, we've got this pop up in the dollar, and it's we've got an initial impulse. It looks like 5 waves, 1, 2, 3, 4, 5 up, and now we're working on some kind of corrective pattern. It's very muddled. It's hard to determine whether or not this is part of just a corrective move to the upside before another move down, or we're just entering a period of drawn out consolidation, maybe sideways for a while before breaking north. It's very much in a very tedious neutral phase right now. And let me go to the daily here. We had this um, based upon the Greece debacle that's taking place in that country. We had this jump up at the opening of the week, and then it got slammed right back down, but then it's since recovered. So we don't have a solid top in place with this week's movement. So I'm not really sure what we've got. I think we're could be contracting into a range-bound move in between these trend lines here. That's a possibility that the market may not be very decisive and could end up being just chopping sideways, centered on this 94.80-ish level, 94.50 maybe, for a while. That's a possibility. But it's hard to determine really where this market's heading off to right at the moment. The QG3 was in a bearish alignment, then has crossed over back into a bullish alignment. Bollinger Bands have pinched in a bit. Again, that's really indicative of just the neutrality of the market. On the weekly, we do close as a bullish hammer candle, though not in the best placement. However, it does set a key low there at 94.68. A break below that next week, especially on a weekly closing basis, that would certainly be bearish and could lead to further downside. But while we're above that level, I could easily see it continue to just chop sideways, or maybe even break above this key trend line here and head up higher. So I don't have any firm answers for you, unfortunately, about this market. It's just led us right into a very neutral spot. And let's see, the EWO here is very neutral, right at the 0 line. We've come up and we've hit the 60 level and bounced down just a bit, but you can see we're continuing to chop sideways in through this 40-60 zone. And the weekly MACD is still open to the downside, and the daily here is still open to the upside. So very neutral picture for the dollar right here. Don't have any strong indications one way or the other, frankly. So let's look at the euro. All right, so the euro had, this nice impulsive move up, but so far this move to the downside is choppy. It could be corrective, but this upward move so far off of this low looks very weak and very choppy. And could it surprise us still to the upside? Yeah, possibly, but it's just very dubious. It's hard to say how this market is going to perform with this current movement going forward. The QG3 is in a bearish alignment to the downside. And the weekly, we did get that gap down. We closed back up, but nothing very serious. If this week had closed, say midway through this bearish candle here from last week, looked like it would have had attempted to earlier, but was beaten back down. But if we had closed this week, say in the middle of this negative candle, that would have been very bearish. That would have been a piercing bottom, and there would have been cause for more upside to be expected in the days ahead. But with this recent beat back down, it's really just very neutral. The EWO again very close to the zero line, very neutral. You can see the price came down to test the 40 level and bounced just a bit, but again you can see we're still just chopping sideways here. It looks like between that 60 and 40 level. This is very neutral, and then the euro on the MACD is open to the downside, and on the weekly we're open to the upside. So basically just an inverted picture of what the dollar's doing right now. Let's see, look at the Great British Pound here. The pound closes down solidly for the week and the day. So I would say the expectation would be for some more selling into the near future, into next week, would be expected. You can see that we crossed below on the QG3 here. We've crossed below the 20 DMA, and you can see that today's little move to the upside, it was capped at the 20 DMA and the 10 EMA right there as resistance. So while we're below those levels, I would expect more selling and possibly come down here to test the lower Bollinger Band, which is moving up very quickly, and could come up here to the 5400 handle here fairly soon as a possible level of support. Again, on the weekly, we're closing in the bottom 10% of the weekly range, so I would expect more selling into next week. And EWO really not giving us much. The RSI, we're just down here into the 40 level, just underneath the 50. Again, not much in the way of indication one way or the other, very neutral. And the daily MACD is open to the downside, that's bearish. And on the weekly, we're open to the upside, and that's bullish. So I'd say in the short term, expect some more selling. It'll be interesting to see how the Great British Pound handles the lower Bollinger Band, or for that matter, the Fibbo retrace levels, which we'll go ahead and throw on here real quick. Okay, so another key level to watch for is the 61.8% Fibbo, and it's down here at about 54, 58, somewhere in there. So we may see the Bollinger Band come up and meet with that somewhere in there, and that could allow for at least a bounce, maybe a significant low. We'll have to wait and see. Let's look at the USD JPY. All right, so we've got the daily close on the USD JPY is definitely lower, but it didn't quite close underneath this bullish candle here, and which opened up at 122.41. So I wouldn't say we've got really a confirmed reversal just yet. On the weekly, let's go back to the day. We'll get to the weekly here in a minute. QG3 is in a bearish alignment to the downside, and you can see that the 20 DMA is continuing to provide some resistance. The weekly does close as a long-legged doji, so pay special attention to the extent of that candle, the highs and lows. The high is at 123.72, the low at 121.92. So next week, really important close. If we close below this week's low, that's going to be very bearish, and the expectation would be continued fall through to the downside. And then obviously the opposite is true. Get a close above this week's high, that's going to be an indication of a possible reversal, and the expectation would be for a surge to the upside. EWO, again, parked right at the zero line, very neutral. Also the RSI, very neutral, right next to the 50 level. The daily MACD is open to the downside, that's bearish, and weekly we are just slightly, if you can see it, can't zoom in any further, but we just got a tick underneath. Signal line has a tick just underneath the baseline there, so that's bearish. So overall picture for USD JPY is neutral to somewhat bearish, though no significant fall through just yet. All right, let's take a look at the Dow. All right, so stock markets weren't open today, but we do have, if we zoom in here, go to the 2-hour. If we back out here, since this top, we've got what looks like a three-leg move down. 1, 2, 3. So it looks like an ABC. I know some are thinking that this is maybe a wave 1, wave 2, wave 3, 4, and 5 for some kind of leading diagonal. I guess that's a possibility, though I don't like it very much. And then we've got this pop to the upside. That could be a wave B. And now we've got this move to the downside, which, if we zoom in here, it looks to me as though we could have a possible wave 1, 2, 3, 4, and maybe one more wave down into a 5, an incremental low down here, and then a pop back up is what I think we could see. Does look like the 200 DMA is being pressured, though we don't have a capitulation just yet. And of course, this last swing low here is providing some support as well. So we'll see what happens next week. I really don't see anything to do with this market right now. We'll go into some patterns that I'm looking at here in just a moment on the other charts. The weekly does close down lower. We haven't seen this low of a weekly close since back here in March of 2015. The EWO again continuing to just chop sideways. Nothing much useful there. We get this slight incursion below the 40, small bounce up in the RSI. Again, pressuring that 40 level, but not quite breaking it just yet. And the weekly MACD is open to the downside still, and the daily is open to the downside also. So overall picture for Dow is certainly looking bearish. It's certainly looking toppy, though there's the lead off from the top is very questionable. It's not very clear. It's not giving us a very clear count. Also, I should say, as far as Elliott wave terms are concerned, I do think it's still possible we get another run up here because the orneriness of this market and being backed by the Fed and what have you. I wouldn't be surprised that they just produce a very slow rollover top that's very rounded, and that may include yet another push to the upside. It could be a lower high, and Well, we'll just go into that in just a moment in the other chart. I'll explain to you why. Crude oil. Crude oil has fallen down. It was previously looking like a cup and handle maybe, but that's completely washed out as a bullish pattern, and now we're heading off to the downside. I do think we will be testing some Fibonacci retrace levels here probably very soon. We take a retrace from this high to this low here. I don't know why it keeps doing that. All right, so the 38.2% Fibonacci is coming up fairly soon. That there's at 54.74. Could be seeing that tested momentarily, and also this previous swing high here at about 54.23 is another key level of support. So somewhere in there, I think crude may come into it and then bounce. It may be just a corrective bounce, maybe nothing very serious, but it may give us a few bucks to the upside. So we'll be looking to maybe get long again in this market right around the 54, lower 54 to mid 54 level, possibly coming up into next week. The Bollinger Bands have spread out here from a previous pinch, and we're pushing the Bollinger Bands to the downside. However, as you can see, we've closed 1, 2, 3 days below the lower Bollinger Band, and we got the 3 EMA closing almost right at the Bollinger Band. So this is getting a little overheated to the downside. Yeah, we could maybe get one more push lower, but I think we're going to see a correction off of this overheated move, at least a bounce back up that could possibly come up and test the 20 DMA again, as it is starting to roll over to the downside as well. The weekly closes solidly down in the bottom 10% of the weekly range, so that tells me that we'll probably see continued selling into next week. And what was the other thing? And we closed this week. This week engulfs several previous weeks. That's also very bearish. The EWO, again, right next to the 0 line, so not very helpful. And the RSI clearly breaking the 40, so that washes out that potential support. And the MACD is still open to the upside on the weekly, but on the daily, we're wide open to the downside. So overall picture for crude, I think it's still bearish, though it may come into a key level of support right around the lower to mid 54 range here coming into next week, possibly. All right, so let's take a look at the LE wave charts here. Here's the dollar LE wave chart, and it's starting to look weak at this moment as far as playing out with this subwave 2. This blue trend line is not producing the kind of rejection that you would expect from this type of correction. So if we continue to move sideways here into next week, we'll see how the week opens up. But if we continue just to chop sideways here, and you need to see the price eat through that trend line, then we may need to get out altogether and possibly reverse our position and get in on the long side and catch a ride up to 100 plus possibly, as it would confirm that this is just a three-wave move to the downside, corrective move, an ABC of some sort. Though I've not favored that in a while because it doesn't make much sense in the longer term perspective. The other idea I have here is this could be a wave ABC to the downside, and then an ABCDE as a triangle wave X possibly, and then another zigzag to the downside could develop after a corrective sideways triangle move developing over the next few weeks. That's another possibility, but overall picture is still very neutral and not very helpful. for any position, whether it's a long side or downside, short side. The euro, much the same. It's just parked itself right on this trend line. It is not really giving us a firm commitment one way or the other. We did have this nice impulsive move up for wave one, but so far wave two is looking kind of doubtful here. I can't rule it out yet, but it's just not performing as one might expect. British pound coming up on a very key test here soon. This blue trend line here, which is currently below, I'd say about 55, 30, 25, something like that. That's going to be a key level. If we bounce off of it, that's going to be bullish. Obviously, a break below it, especially on a daily closing basis, is going to suggest that we may be starting to break down sooner than later. The 61.8% Fibo retrace of the previous uptrend is sitting there also at about 54, 59, or 60. Also, that could be another key level of support to watch for. USD JPY. So far, we're getting a fairly satisfying move to the downside here off of the blue trend line, which could be a subwave 2, and we could be starting a wave 3 of 3 to the downside. That's certainly possible, but it's going to be highly dependent upon keeping. I'm going to move this key level of resistance here. Key level resistance is at 123.70. So break above that, and I would say the downside is potential is washed out, and we may see yet another move to the upside coming with a short squeeze. Natural gas, it was looking like we may have been starting a rule of 4 breakout to the upside, but today's move sells it down right down into key support. It could be just some jitters going into the weekend, the long weekend with the Independence Day, 4th of July holiday in the United States. It's a possibility, and this market is just routinely likes to keep everybody on their heels, as it just seems to refuse to want to obey any patterns whatsoever, you know. So we'll see what happens in the next week. I would want to hold on for now to see how this market behaves going into early next week before doing much with it, anything more with it anyway. And the 10-year note, it's just in this choppy sideways move right here, just range bound between 124 and 29.30 seconds and 126 and 29.30 seconds. So if we break above that level, that looks certainly bullish and could allow for a move right back up into the 130s or even higher. Break below that level, it would be bearish and could invite the tumble that we've been expecting. So I think the best thing to do right here is just to hold on and wait and see what happens. Okay, so here's a Dow. Here's a particular pattern that you see. It's fairly rare, but you do see it from time to time, and it is very powerful if and when it plays out. So, and what it is basically just a double shoulder, head and shoulders pattern where you got two shoulders, and we've come down to the neckline to marry up with this touch of the neckline. And so we may see another little move down, but then a pop right back up into a second right shoulder that should be able to come up and move above the previous smaller shoulder as part of a crown formation, basically finishing off the right side of the crown, and then the next dive below that level. Next time we move below the neckline, wherever that's finally established, it should provide the capitulation that we are expecting. For a long time here, we've been trying to catch shorts in this market, and to no avail. It just has been ornery as it's been slowly rounding over. I certainly see no reason to be buying this market. I've said that for a long time now, that I just see no profit in being long. I do think there's an advantage to being short here, but grabbing a hold of that short has been terribly elusive. So, again, I think it's best just to wait and see how this market's going to behave. Um, it's not uncommon for the stock market in particular to work on rounded tops and instead of sharp tops, blow off type tops. Okay, so I'm going to conclude our coverage of the markets for this week, and hope you all have a great weekend. If you're in the United States and you're celebrating the Independence Day, have a nice 3-day weekend, and we'll catch you next week. Adios.